following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, David White.
And welcome to another exciting edition of the Power Trading Hour with me, your humble, lovable, and squeezably soft host. Another day into the breach, dear friends. And I don't know what else you can say about that. We're up a little bit, 13 points on the S&P cash, 1.8 billion shares. Again, we get up here and there's no real sign of strength. I'd like to see either a sign of strength or a sign of weakness. We have neither. So that still says that we're stuck in some kind of trading range, just in the upper side of that trading range. So, we continue to look through these markets and see, just what else could be there in there. And it's kind of tough. We look at a lot of these markets that just seem like they're just about ready to go, like the gold market. It was right up there ready to go. And pulls right back. Kind of I'm only going to call this the Lucy market. You're Charlie Brown, you're ready to kick the football, and old Lucy just pulls it away. That's pretty much what's happening out here. Every time you got everything lined up, they just pull you away. Anyway, gold off 18 bucks. We've got silver off 4 cents. Not a big deal. Still in the 16 buck range, 16.15. So always looking for a few things out here I thought that might get this market going. Well, it certainly isn't a lot of volatility in the dollar. That's finally started to slow down a little bit. And we've got, we're up 24 cents, but $94.33. My supposition has been that they're trying to keep at least the dollar around that $95 level without going over. Is that match game? No, that's The Price is Right. But as we do, as they do that, they're storing up more and more energy for when the market does correct. Right now, they are at least a lot trying to figure out just how not to upset the apple cart with everything going on in Greece. We'll get into that in a minute. But first, we need to start off the show as we normally do.
Then it's all just a little bit of history repeating.
In stock market news, in 1988, Dell Computer, run by a then 23-year-old college dropout Michael Dell, goes public on the NASDAQ at an initial price of $8.50. I don't know what else you can say about that, other than most of the people that are running these startups tend to be people that have left college and don't want to wait around to get a job for somebody else. I guess we can't say anything else. He actually turned into a fairly decent CEO for a company like that. Always had the disposition of a CEO that probably would have been good at Walmart or Target or any of the other big retailers, of keeping costs down and making sure that deliveries were up. He was kind of the vanguard of the just-in-time manufacturing and distribution market, and taught the rest of the market and companies in the United States quite a lot. Kind of you'd almost say he's kind of a Ford guy, and Ford came up with manufacturing, and I think he's kind of the guy with just-in-time inventory and just-in-time shipping and just-in-time everything else, and basically squeezing every last drop you can out of an institution. In 1979, two gentlemen, Marcus and Arthur Blank, opened up a home improvement store, a little tiny thing, painted nasty orange. Today it's known as Home Depot. It's one of the world's largest retail outlets, but they got their start today in 1979. Seems like they've been around forever. But I go to them just about all the time. So what else do we have out here today? Just getting ready to get into some news out here, but for the most part, there's a few things going on. Let's go ahead and get some charts up. Normally when you get into highs in a stock and there isn't anything really holding it back, it's hard to figure out where and how far it's going to go up. But one thing is for sure, there will be analysts that will give ludicrous, super ludicrous calls on the market. Today, that super ludicrous call on the market is from a analyst giving a price target on 950 on Netflix. Although all these analysts are also lowering earnings forecasts. So what gives? Is the earning forecast wrong, or is your forecast for $950 wrong, or you just think everybody's gone insane and it's the .com world all over again? And I wish I could just call those analysts up, but we got a lot of analysts making ludicrous calls, I suspect, at the moment. Of course, in 2000, the ludicrous call was Amazon to $1,000, and that was within the next 18 months. We know now that the gentleman that holds up, what is it? One of the big business sites now. I want to say Blankfeld, but that's not it. I'll think of his name in a minute. Red-headed guy was basically emailing all his compatriots in the company saying what a dog Amazon was and that it was probably going to go broke, but telling everybody publicly that they should buy it. Nothing new in that. He got basically excommunicated, not killed, but excommunicated from the stock market. Now he covers business news for the market, trying to get back in, but I don't think that they're ever going to let him. Anyway, ludicrous calls on Netflix, ludicrous calls on Facebook. And the thing is, just where is this growth going to come from? But both of these companies are lowering estimates for numbers going forward, but the analysts are upping the call for its price target. $120 on Facebook, which is it me or is it just somebody else? This one kind of lost a lot of its juice and its mojo. It had a nice little Gartley pattern kind of setting up here. We are right to the edge of it. You'd want this thing to basically pull back and probably close below 83.71 in the next day or so. It's kind of at the far extreme, but it doesn't look all that bad as a Gartley pattern out here, and that is that there just isn't energy on this C to D leg that you can really speak of, and more likely in a trading range. Other companies that are really gaining my attention are Bank of America. It's in a Gartley pattern. It's trying again today on very light volume. These financial patterns truly look like there's going to be either a huge move up or a huge move down by the end of the summer. They don't seem to be giving up easily, but certainly you had a monster move down in, let's say, Bank of America from that December 31st high to the January 16th low. And that kind of energy just hasn't come back in. As B.B. King said, the thrill is gone. I got to get a clip of that for my stuff. Anyway, the thrill is gone, and I don't know what else you can say anything more about that, but I think that was one that I had. I'm trying to remember the other one that I had. Maybe I can bring it up here in a second. One I thought was interesting. Why is this not here? Let me open other documents and my computer and my April and today. I think I did it down at the bottom, so let's get down there. Okay. Was it? Yeah. Okay. They weren't financials. Let's take a look at the housing stocks. These things came right up and are making some Gartley patterns themselves. Don't look that different than the financials, which I think suggests, tells us something out here. D.H. Horton could go up a little bit farther. The D target on this for a standard 222 Gartley is $28.35. We got to $27.73. But if you watch my power law vector indicator number on the X to A leg, which it comes in at 5.3, you're basically coming in at half the energy on a 2.5. And it is just we're up against this B point, but when we need 6.2 million shares, we've got about 2.4 million shares today. Could we continue up maybe tomorrow in this? I think the answer is that we could, but it's not the only stock out there like that. Beazer, BZH, this one kind of already completed one, and it's just hanging out here on the side. It's up against its April 15th high out here today. Volume is tepid. You need 430,000 shares. We've got 220,000 shares so far. So maybe volume gets up there. But again, this energy on this far side looks like it's extremely light. And I don't see a lot in either this housing sector or the banking sector that makes me think that this is some kind of massive breakout. I'd like to see any kind of sign of strength. You know, you did have kind of some decent volume on Friday with 900,000 shares. But again, you get back to one of the swing points like the D point from April 15th and the volume falls out. What's that song? And the bottom falls out. I'll have to look that one up too. That would be a nice sound clip to play. Anyway, those are a couple of the ones I'm looking at out here today. What else is out here? Woodworm. We'll get into the rest of them. We got a couple of minutes here. Let's get into what else is moving out here. WMB is a huge mover out here. WMB. Everybody's talking about mergers and acquisitions, any way to financial engineer their way out. Williams Company, of course, is talking about that, rejecting an unsolicited takeover proposal from Energy Transfer Equity, ETE, for $64 a share. So it got to $60. Pull back a little back here. But what we're really looking for is these major highs, and caught a lot of people on the wrong side of this market and short from September 2nd, 2014 with $59.77, 4.7 million shares. Again, 78 million shares today. So if any of these companies look like an acquisition target, probably not a good target to short. Other companies out here, another buyout from a company called Oran, O-R-A-N is the symbol, a European telecom. This one, fairly light volume, but popped up kind of interestingly enough. What else do we have? On the downside, we've got WPZ. We'll talk about this one when we come back. You can give me a call at 877-927-6648. You can email me at path@tfnn.com, or you can post a message in the den. Pretty quiet right now. We'll be back in a minute.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartleys, ABCs, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Thinkorswim, David White, Andy Hecht, and Daryl Martin in crystal clear, high definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
And we come back to WMB, is that right? WNZ. Williams Partners is, well, it gets the treatment today, doesn't it? It has to get the treatment. Underperforming today. And why? Stop that. It's Windows popping up over what I have. Rejected a takeover proposal which was contingent upon it terminating the previously announced acquisition of Williams Partners. Williams says it's continued to work toward the completion of the transaction with WPZ, but off 8%, filling this gap where it came up and probably in some level of support. International Paper. This is always one of those companies that is a canary in the coal mine. So you want to keep an eye on this one. It was off about 4%. 4% doesn't justify a Price is Right. But what you were looking for was it not hitting 10 million shares from the May 5th low, and it did not. It scooped by with about 5 million shares so far. So could be something happening out here. It is lower. It's probably going to keep lower than that too. Of course, it was down to $48.71. What you don't like is the energy. It was fairly decent since that probably the B point on May 19th. So, or actually C point, yeah, A, B, C. So probably look at that completing a ABC on the way down, which takes you to $46.86. You know, there's a big sign of strength right there when you go back to the 24th of July in 2014. A huge day out there with almost 20 million shares. So we're kind of into that already out here. To complete the one-to-one, you'd want that $46.86. But if you want to know which way the market is going, or at least the U.S. market is going, you look at international paper. If you're building new houses, they make all kinds of siding products. If you're talking about shipping products, they make all the containers for all the products that we ship. So if you want a core temperature, colonoscopy, just put the canary in the coal mine, and that is international paper. Not looking good today, but the volume a little light out here, so we may be in some support area for a while. A couple more bucks down to complete that ABC down. You know, could we pop back up a little bit? I guess the answer is yes. You don't like that it really increased volume, though, from Friday. And why it's going to be a little short out here on volume, I think you can probably still figure that this thing is going to complete that ABC down. Newmont Mining, double whammy today. Also, you know, gold down. And, you know, NEW. How about NEM? I haven't looked at this in a while, so I wanted to take a quick look at this. But not a lot of volume out here either. Like I said, gold was actually starting to interest me going into last Friday. I didn't like the big move out of there. I want this thing to be sideways for maybe 15 days. Let's go to GLD real quick and take a look, because I was talking about that last week. I mean, we had the opportunity for maybe, you know, if this thing would have just stayed sideways for a few days, but Thursday and Friday pop out here pretty much given back. My guess is that you're going to test that $11.57 low from June 5th fairly quickly, even though there isn't a lot of volume. The energy was just too much in this last leg down out of May 18th's high on GLD. And if we can get this thing, it doesn't have to break down, but if we can get this thing to go sideways for maybe 7-15 days, then we will, it will be nice. Doesn't have to break that low. It could, but I'm saying that probably the next big opportunity is if it could get down to 111 a level and just go sideways for a while. Just let air all the energy out, bore everybody to tears this summer, and that's it. You know, you've had a good test of the bottom at 8 cents short, but certainly it did it on volume. The November 5th, 2014 low at 109.67. You know, it went to 109.77. I'd still like this thing to test that previous low out there. I don't know if we're going to get that or not, though. But I need either some time to consolidate at 111 and or a test of 109.67, once again on lighter volume. That one would be the preferable one out here. And we're going to break again. In the meantime, give me a ring at 877-927-6648. Email me at path@tfnn.com and or post a message in the den.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative Market Safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year Market Safe Power Metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
And we're back. Anyway, we're looking at gold out here. Not a lot actually happening, but just thought we would take a look at it. But well, it sure would be nice to have this thing go sideways for a while, bore everybody out, and then come back and take a look at it again. PTLA reported full results from the second part of its phase 3 study, and of course, nice little spike up. This thing pretty much completing an ABC on the way up. When we look at this, wants to go to $52.37. So you've got another $2.37 on here to complete an ABC on the way up. This is Portola Pharmaceuticals. What else do we have? Kite up 5.5%. Now it's a collaboration with Bluebird Bio. These are all bio stocks moving out here. Kite, nice little pop. It's going to be light, though. It was up against the April 20th high, $66.40, 2.2 million shares. We got 1.2 million shares here today. Another one, the other one getting crushed today. I saw this thing down $10, AMBA. Continued weakness from Friday's cautious comments by Citron Research. I hope they don't make the Citron cars, because this thing is horrifically bad. The Citron car was, anyway. Ugly car. The guy that was the mentalist drove the horrible little Citron car around. I figured they towed it everywhere because those cars never ran when I was over in Europe either. But, yeah, what a smackdown out here. You really didn't get a whole lot of notice on this thing. It just fell apart. But that's a ballistic stock. And again, my definition is ballistic is 10 to 15 days above a 3x3 displaced moving average, or a standard traditional 9-day moving average. Both of them are pretty quick. There's the displaced moving average will get you out just a little quicker. But same thing with that. Boy, we just busted it. It was printing around 108 pre-market when I saw this thing. Got down to 95.25 for the low out here today. There's a little gap between 91 and 92.50, and it kind of just got to that gap. And it is a tiny gap, not a lot of volume that day, 7 million shares, but was enough, just enough to hold this thing up today. Of course, if you're unfamiliar with this company, they make the chips for the GoPro cameras. And let's just see if we have anything in GoPro going on here. GPRO in sympathy, off a little bit. Now, this out here would have been the trigger, I suspect, because this is a double repo pattern. And this would suggest that the wheels have come off GoPro and you are cleared to short the thing. It's still probably monstrous high short interest, but as far as the chart pattern, this is kind of what you're looking for. 10 to 15 days above that 3x3 displaced moving average, or 9-day moving average, a few days underneath it, a couple of days back over it, and then a sign of weakness back underneath it. And this would suggest that this thing's in a trading range back down to $37.13. But I would imagine both the puts and if you could even get any shares to short this thing are probably difficult or impossible at best. So maybe people are hopping on the AMBA as a way to go after this anyway. SYNA. Got to get the A in there. Synaptics Biologic. Another one. Double repo pattern is confirmed out here. So we got a few of these stocks that are, the wheels are falling off. This one had significant volume. It would suggest that it's coming back to at least around the $86 range. And a little bounce out here today. If you could get a couple more bounces, the ideal way would be to basically hope to get this as close to the 9-day moving average or 3x3 displaced moving average on the way back up. And in that, if you could get that, then you could pull the trigger up there. A little late to the party out here. Actually gave you the confirmation on Friday. So that is a great pattern. It's a Joe DiNapoli pattern that I really like. FireEye, one of the stocks that I actually like out here. If the market would ever cooperate, I'd love to buy it. This one's another one. Look out below. It did basically set up its 3x3 displaced moving average failure in a double repo pattern. You look for it to come back in and above the trend line for a day or two again, and then the next close underneath that would suggest that this thing is going to pull back down to the start, which is at about $42. So we got some stocks out here that are starting to give at least some dark clouds to what a lot of people are putting on a silver lining to the Greek fiasco. We're going to get into the stocks that I've seen in my scans out here that I thought were interesting. Got some hanging out here at these highs. CVS Caremark, watching this one closely. Had a little doji out here on Friday. You could have pulled the trigger on that because of the light volume going up against it. You had 5.6 million shares. 9.1 million is what you were going after, the March 24th high. And, you know, basically Friday you had that 5.6 million shares. Tried the day before it with 4.8. Today, 2.2 million shares. So volume very light on those. Those are really risky stocks. Keep an eye out for them. Another stock that looks like it may be blowing off on the top is Ellie Mae. We talked about this. The Clampetts, Mr. Drysdale, are out behind in the cement pond on this guy. But this is the whole thing, the house, everything. This one spiked to $70.79 today. It needs to close back below $67 to confirm, so I won't be pulling the trigger on this, but look for this to come back to about 56 bucks where this thing all took off. But this whole energy since the May 12th low has been pitiful. No sign of strength on a break above. And my guess is that we're going to see this thing probably rotate by late tomorrow afternoon. Hasbro, another doji up here on light volume compared to the previous high. 7.8 million shares when we get back to April 23rd. And I don't know what else you can say about that. You had that big day. Yeah, you had April 21st. But 7.8 million shares. So last 3 days, 786,000, 1.4 million shares on Friday. Today, 364,000 shares. And a doji. What you would need, of course, for this to prove the point is a close back below $74.75. I almost feel like a auctioneer. 74. It's got to close back below 74, 75, 74, 75. Just on that one. And also, for those that caught the show Friday, Safra Cats. I couldn't stop saying that until probably mid-Saturday afternoon. It just kept coming out of my mouth. And I probably shouldn't have said it again because I've got the desire to say it again. Safra Cats. Anyway, huge gap down on Hanes Brands, HBI. That occurred on April 24th with a little over 12 million shares. Last 3 days of volume as it's filled this gap is 2.2 million shares, 4.7 million shares today, 1 million shares as it kind of shuts the door on that gap. So old Hanes Brands out there, I like cotton, but maybe cotton doesn't like Hanes Brands. LKQ Corporation. This one's kind of ringing the bell. You really wanted to see September 3rd's volume from 2014 at $29.21 really come into that, and we're breaking above it again, and volume's about half or less today. Volume pretty pitiful. It's 600,000 shares. Macy's out here. And what do we got in this one? The one that is interesting to me is the high volume spike on January 8th of 2015. You had 8.1 million shares that day. Tried to break through it. Had a reversal on the April 8th high. Next day, basically railroad tracks, tweezer top, however you want to call it. But you came into it with 5.3 million shares right back into it. Had a huge pop back up on the 15th of May with a ton of volume, 12.3 million shares. But it gets back up into these highs the last 4 days, 4.4 million shares, 4.45, 5.3, and 1.7 million shares today. And you need to make sure this thing closes at least above the April 8th high at 69.98. And what would be very bearish on this is a close back below the January 8th high, $68.30. So there's some numbers to look at. Again, you can email me at path@tfnn.com. You can call me at 877-927-6648 or post a message in the den. Manhattan Associates was kind of an interesting company. Did we talk about this one on Friday? I was going to say that a lot of these are got some little dojis out here on no volume. Develops maintains software solutions to manage supply chains, inventory, and omni-channel operations for retailers, wholesalers, and logistic providers. Another very light volume move up to these highs. MANH is the symbol on this one, April 23rd. $59.98, 1.4 million shares. Last few days, 727,000 shares, 846,000 shares. And today, Doji, warning, danger, Will Robinson, 337,000 shares. So got some very, very light volume. Normally, if these things don't pull back, you give them 2 days to pull back or get volume. Time to either fish or cut bait when we get up to these levels. Service Now, another one that had a horrible gap down on April 17th. That was 13 million shares. It's come back and tried to fill its gap. That gap down, of course, was on 13 million shares the last 4 days on this. 1.3 million shares, 1.6 million shares, 1.9 million shares was down day on Friday. Today, 573,000 shares. So we would have liked to seen a continuation down on this and had it picked up some volume, but not any real luck on that so far. Nutrisystems. Normally these things run in the fall, not in the spring. Kind of interesting to see this thing come back this time of year. Hanging out here at these highs, another one with a nice little, nothing of a doji out here in the way of volume again. It spiked to its high on May 4th with 1.3 million shares. $24.54 is the key. Tried to get into it on June 12th, pulled back into the trading range. You've had two dojis out here, the one on the 17th and the one today. Certainly this thing either needs to fish or cut bait. We talked about the oil sector. I had people ask me about it. I still think that there isn't a whole lot out here for the oil patch. When we look at the crude contract today, it's up 46 cents. Thought we'd probably stay under 60 bucks. It looks like they're trying to keep this at right around 60, and that may be more manipulation than anything else. To me, this really smacks of a trading range from about 53 or 55 to 60. $2. So maybe we're going to hang up here for a little while before this thing retreats. But tough to see anything else out here. To another energy stock. This one actually looks a little bit better. One OK Partners. OKS is the symbol on this one. But you needed 1.5 million shares to break through these lows. You basically came down with May 7th with 1.4 million shares. But the last few days, very light volume back into these lows out here, and a bounce back into the trading range. So some of these are giving a little counter signal. RPX Corporation, this one's doing a light volume test of its previous high out here. We'll get a read on this. Provides patent risk management solutions in the United States, Japan, and internationally. Offers subscription-based patent risk management solutions that facilitate exchanges of value between owners and users of the patents. Interesting business. The patent troll business, or the paperwork behind the patent troll business. RPX high April 29th, $16.72, 770,000 shares. Into it with 300,000 shares and a doji on Friday, making another little doji out here today on 100,000 shares. There's just not a lot of juice. Coming into the home stretch of this segment, Swift Energy, another one of these energy stocks out here down at the lows, not looking all that bad. As we said, some of these look like they are at least trying to bottom out. January 22nd, you had 5.6 million shares at $1.99. Went below it with a little light volume and rocketed right back out. Got back up. Didn't have enough juice on the first leg. Energy starting to come out of this leg here. Maybe get a few more bounces, but this thing looks like it's finding a support right below the $2 level, so keep an eye on this one if you're into the penny. St. Jude Medical is another one out here. This one's testing its high, so we want to see how all these close. But we'll be back. We'll look at St. Jude when we come back, another low volume test of the high. Nothing different going on in this market. We'll be back in a minute.
Trade with confidence and clarity while using the software that thousands of institutional traders rely on to make the best and most accurate decisions. Choose from 1,000 equities, currencies, and futures instruments utilizing the TAS architecture. As seen on Bloomberg terminals worldwide, the TAS Profile Scanner is a benchmark technical filtering system that thousands of traders rely on, and now you can too. For a limited time for TFNN subscribers only, we've reduced the price to just $97. That's over 75% off. John Logan hosted a special subscriber-only webinar in December, and you'll gain access to that archive as well, so you can learn exactly what the TAS Profile Scanner can do for you. Try this product out. No matter what you trade, the TAS Profile Scanner can help you make more informed trading decisions. There's no obligation to pay anything. Don't let this offer pass you by. Get your 30-day free trial to the TAS Profile Scanner today by signing up at TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Tom O'Brien, professional trader and educator, founder of TFNN. Also, a special guest on CNBC. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
And we're back. We're going to look at St. Jude's. It's a quiet day out here. Not a lot of juice in the market. Just over 2 billion shares. So again, we get about 2108 on the S&P cash, and the volume just dies. Everybody likes to buy a dip. No one wants to buy the breakout. And that's where we're at right now. 2 billion shares. This is going to be a very, very light Monday. And I guess the idea is that probably the Greek deal will fall apart again in a day or two. They'll try to continue kicking this down the road to the 30th. So we got maybe another 8 days of the extend and pretend. And as they say, that is it. Okay, what else do we have going on out here? Time Warner. Little test of the highs out here. Now, this one, again, very light volume. You're going up against the July 21st, $88.13 high, 9.1 million shares. Tried to get through it on March 23rd with 6 million shares. And today's 3.7 million shares just isn't ringing with a ton of confidence. The energy's been very light since the last April 1st low. This thing trying to bounce around a little bit in this, but just hanging around these highs and not a lot of volume. WMC's another one out here. WAW. Let's see, we got time for one more. Let's take a look at this one. Woodward, WWD on this one. Let's get the profile on it. It's going up against its 1.6 million share spike high. And that happened on July 22nd of 2014. We're into it with, 580,000 shares, so about a third. So that's it. Okay. Let's look at it. Manufacturers, design services, energy control, and optimization solutions for the aerospace and energy markets worldwide. It's aerospace and segment provides fuel pumps, actuator, and air valves, specialty valves, fuel knobs, thrust reverser, actuation service for turbine engines, blah, 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 blah. So this one's up here, another one to keep an eye on. Kind of only thinly traded. The energy was basically the same from the January 15th low to the April 6th high, from the, when you compare that to the May 6th low to this June 18th high out here. But again, volume just falling down to nothing, and you're up against that 1.6 million share high. Let's just look at this just a little farther back and see if there's anything else out here. That's it. But you know, you don't have enough energy to break out to the upside, and we're kind of in the downside. And Nextron Corporation, XON. This one's out here, another one testing highs on very light volume. March 2nd of 2014, we had $50.98, 3.1 million shares. In the last 3 days, we had 1.8 million shares, 1.7 million shares. Today, 880,000 shares so far. So let's say we get a million or 1.1 million shares. You're still got 3.1 million shares that you're going up against, and that is problematic at best. Well, we're probably going to be hanging out. It is options rollover. We're going to have a little bit of that kind of congestion. But this super light volume is got to be followed up by probably some fairly significant volatility in the next few days. We might get one more day out of this for options rollover. But my guess is that we're going to break out or break down out of this probably on Wednesday after options rollover. This segment takes us right into September, and pretty much locks up what the summer trading is going to be for option market makers. And it'll tell us a lot. In the meantime, sell when you can, not when you have to. We'll see you tomorrow. Same bat channel, channel 14 on Tiger TV. Same bat time, 2 o'clock Eastern.
Larry Pesavento has just announced a new service that is designed specifically for technical traders that follow Fibonacci patterns in many markets and are always on the lookout for profitable trade setups. Larry will be sending his subscribers a constant stream of charts and videos whenever he finds formations and trade setups in the market you need to know about. And each Monday morning, you'll receive Larry's written report that provides detailed commentary on the charts and videos that he sent out, as well as what to expect for the week of trading ahead. Larry's first issue will be delivered this coming Monday, and in the days remaining, we're offering a special launch promotion where you can get a full month of Larry's new service, Fibonacci 24/7, for only $47 with a 30-day money-back guarantee. Larry has already started sending out charts and videos to his subscribers that have signed up, so don't delay and sign up now. You can sign up for Larry Pesavento's Fibonacci 24/7 right now by visiting the front page of TFNN.com.
You're watching Tiger TV.